Are gas prices about to drop? Well, if the UAE is leaving OPEC, this is going to be interesting because if you think this is just another oil headline, think again. This one hits your wallet directly every time you turn the key or start your car. Because the United Arab Emirates, or the UAE, one of the most powerful players inside of OPEC, is walking away from the cartel. That's a crack in the system that has controlled oil prices for decades. And by that extension, what Americans pay at the pump is about to get impacted. For more than half a century, we've had issues with OPEC. And now there's going to be some changes. And for drivers already dealing with high gas prices, this matters more than anything coming out of Washington right now. For decades, OPEC has operated as a coordinated force, adjusting production to influence global oil prices. Less supply meant higher prices. More supply meant relief, but only when it suited the producers. It was never a true free market. It was controlling output designed to protect revenue, and they really didn't care how much you paid at the pump. Now, one of the few countries that actually had power to move markets is stepping away. This is actually good news. The UAE isn't just another member. It's one of the rare producers with real spare capacity, the ability to quickly increase output and stabilize supply during disruptions. And alongside Saudi Arabia, it helped anchor OPEC's influence. Take that away, and the cartel doesn't just weaken, it loosens control of the narrative. Again, more good news. So why should the average driver care? Because this could be one of the first real signs that global oil pricing is shifting away from centralized control and back toward competition. And when competition increases, prices tend to come down. But don't expect that relief overnight. Here's the reality drivers are dealing with right now. Gas prices in the U.S. are already elevated, sitting above $4 a gallon in many areas. And that's not just about oil supply. That's about geopolitics. Tensions tied to Iran and disruptions around the Strait of Hormuz are one of the most critical oil shipping routes in the world, even though we're only getting 3% of our oil from there. And that's driving volatility and keeping prices high because it's based on global oil markets, not just what we're doing here. That's the immediate pressure on your fuel bill. Not the UAE's decision, at least not yet. The UAE exit is a medium-term shift. It means the country is no longer bound by OPEC production quotas. It can pump more oil if it chooses, and it has made it clear it wants to expand output significantly. More oil supply should push prices down lower on a global basis, but only if that supply actually reaches the market. And that's the catch drivers need to understand. Oil prices don't drop just because more production is possible. They drop when the oil is flowing freely, refined, and distributed globally. If geopolitical tensions continue to disrupt shipping lanes or production, the added supply won't fully offset the pressure immediately. And that's why in the short term, volatility is still part of the story. So let's answer the question every driver is asking. Will this lower gas prices? And if so, when? Well, in the next 1 or 2 weeks, probably not. Prices will continue to react to global tensions more than anything else. But within 2 to 6 weeks, that's when things could start to change. That's typically how long it takes for shifts in crude oil prices to filter down to what you pay at the pump. If the UAE ramps up production, which they say they're going to do, and tensions ease, which we might see, even slightly, drivers could start seeing prices move down by late May and into June. And that's good news. We're not talking about a sudden return to cheap oil, but a drop of 20 to 50 cents per gallon is realistic if conditions line up. For families commuting daily, running businesses, or planning summer travel, that kind of relief really matters. And yes, this ties directly into the broader automotive landscape. Higher fuel prices don't just affect what you pay at the pump, they influence what people buy. When gas prices spike, consumers start rethinking vehicle choices, holding off on larger SUVs, considering or reconsidering trucks, or delaying purchases altogether. Automakers feel that shift immediately, especially as they try to balance EV investments, which they're pulling back from, with ongoing demand for gas-powered vehicles. People are looking at EVs, but they're not making that purchase because they're not sure when gas prices are going to lower. And when prices ease, even slightly, it stabilizes that decision-making. It gives consumers more flexibility and helps normalize the market. That's why this OPEC fracture isn't just an energy story. It's an automotive story. Looking further out, the bigger implications is what happens to OPEC itself. The UAE's departure exposes long-standing tensions inside the group. Some countries have followed production limits, others have ignored them. That imbalance has been building for years, and now it's starting to break apart. And when a cartel loses discipline, it loses its ability to control prices. And we saw that with Venezuela. And that's why we're starting to take in all their oil, refining it, and then selling it to other countries, making us a large exporter of fuel. That's good for drivers, but it comes with a trade-off. Less coordination means less volatility. Prices could swing more sharply in response to global events. That's not ideal for consumers or automakers trying to plan ahead, but it does reduce the ability of a centralized group to keep prices artificially elevated, which is what OPEC has done in the past. There's also a strategic shift happening behind the scenes. The UAE wants flexibility, not restrictions. It's investing in expanding production capacity and positioning itself to produce more oil, not less. In the years ahead, that's good news. That aligns more with a competitive market than a controlled one. For the United States, that could quietly become a very big win. More global supply, less cartel control, and increased competition all point toward lower energy costs over time. But again, timing is everything. And right now, geopolitical instability is still the dominant force, but we'll be watching. So here's the bottom line for drivers. The UAE just weakened one of the most powerful forces controlling global oil prices. That opens the door to lower gas prices and more competition. But in the short term, that same geopolitical risk that pushed prices higher are still at play. If tensions ease and supply increases, you could see relief at the pump within weeks. If not, expect more of the same volatility that's been hitting your wallet every time you fill up. Either way, this isn't just another oil story. It's a shift that will play out on American roads, in dealership showrooms, and most importantly, at the pump. I'm expecting prices to drop in 2 to 6 weeks. I'll be monitoring this and reporting back. If you like this video, give it a like and subscribe for more videos like this, and check out our car review channel, Car Smarts. You can support me by buying me a cup of coffee, and if you want even more content, check out the links in the description. I'm Lauren Fix. Thank you so much for watching.